So, for instance, on other episodes, we've talked about scaling your business, and I've broken down into 8 phases of scale. The first one, 0 to 100,000, 100 to 250, 250 to 500. Here's the thing. The amount of credit that you should have when you're 0 to 100,000, it's probably 5, 10, maybe $15,000 in credit. That's all you really need. Something to cover some short-term, and that could be simply a credit card, right? And that is not hard to get necessarily. However, when you go from 100,000 to 250,000, now you're probably talking 25, maybe $50,000 in available credit. Again, that could be a couple of credit cards. It could be a smaller term loan. It could be a line of credit potentially. I don't know if you quite qualify for that. You may or may not. We have got clients approved for less than 200,000. At the end of the day, the reality is as your revenue increases, your need for access to capital credit is going to increase. And here's the other thing. I hear people say all the time, I'm self-funded, I'm using cash, I got cash in the bank. That's phenomenal. That makes you even more valuable to the bankers. Put the money in the bank, put the money in an interest-bearing account that's going to make you more money on the cash that you have, and use it as a backstop while you leverage the bank's money at a low interest rate. Even if it's 6% on a line of credit, you're only using it for as long as you borrow the money. So if you borrow the money for 2 weeks and pay it back, your interest is negligible. But here's what happens. You start out with a $25,000 line of credit and you use it a couple $1,000s every month, back and forth. Within a year, that line of credit is $100,000. It has grown with you. And now you have access to $100,000 when your business is $250,000 to $500,000. That's probably where you need to be at that point for access to credit. So the thing here is that you have to grow along with it, and you has to be part of your annual plan. So as you're building out your plan for sales growth, you need to be looking at what does that look like on my business credit and what should I be focused on?